Full face. Here's mine. So the Fed, I think the Fed was pretty anticlimactic with how we were all sitting on pins and needles. They did what they said they were going to do. Market action wasn't that crazy afterwards either, so no surprises. I'm starting off here showing US dollar yen. Okay, what a classic example of glaring divergence on the 4-hour. I don't know what the BOJ did last night, but the yen strengthened on it. Hi, Nigel. Juan, how are you? Cheryl, Hamid, Ingmar. Okay, so hanging on by a thread. Basically, this is going to be an important area should we get down to 107.5, because you just do the arithmetic. I've always said that if you could add and subtract, multiply and divide, you could trade and come up with targets and objectives. So this 107.5 levels significant. See it here, see it here. If we get down here again and break it, you just do the simple arithmetic count from 108.50 to 107.50, and what a coinkydink takes it back down to the breakout. And moving average on the 4-hour 106.50 would be viable then. And what probably has to happen for that to occur would be for yields to pull back in, which they're doing right now, and maybe back towards 165, 160.40. So I've seen a couple counts where yields could make one more new low, that this is a 4, and we could make one more new low in yields. But if that's not the case, and yields have already bottomed out, and we talked to Privateer this week, that's his view, and he was bullish euro because of it, then if we get this pullback here in yields, you have to look to be buying the pullback in yen as well, because there, look at the correlation. Okay, yields going up, right? Yen going up. So this may just be a correction down here to 106.5. And if we hold this on a pullback and go again, we're talking sharply higher US dollar yen if yields are bottoming, and yields are going to where a lot of people are talking 2.5 or so. I think Privateer is looking for 3 again. So that'll be the big surprise with the Fed easing. So with yen coming off, gold is popping, silver's popping, and still could set up some type of failing rally. When I look at the daily here, my preferred short, because you see this high in silver on the daily, and you see this RSI reading here. Markets rarely peak when momentum is this strong, 83, and confirming the high. There's no divergence here. Okay, so even though using divergence to trade reversals isn't always reliable, I have found that this is pretty reliable. Not that it never happens, but normally when a market on both the upside and downside is being confirmed by momentum, that high or that low ends up not being the high or the low, just a high or a low. Give me a Y if you get it. So the information it gives you when you see confirmed moves is that as a trader, you should be looking to, if we are confirming highs, look to buy pullbacks, because you know that markets rarely peak on confirmed momentum and price. Okay, just a little lesson there. And I want to show the S&Ps, because I've been talking about this 29.75 level here, and that's what we touched again yesterday, a few above it. So if you want to know when the S&Ps might be rolling over, regardless of what it does to the upside, 29.75 is your first indication, and that would measure back to the breakdown around 20 breakout, right? So if we negate this breakout, we have problems under 29.35, 29.40. Then I think we're going, okay? And let's see, anything else to talk about? Euro pound held at an interesting area. I didn't do it because I still think that it might go 78.6, but check it out. 61.8. Still my contention. This is a bull market, although maybe it's just ABC. I don't know. But this was a pretty powerful move, and this could be viewed just as a normal correction. Okay, so maybe it's we get a bounce and then we even go 78.6, but my bet is that we get a new high here before we get a new low, so I'll be looking to accumulate there. Hello, Lena, how are you? And I, in case I forgot, I do want to welcome our viewers at investing.com. And we have an excellent promotion going for the fall trading season. I encourage you guys to take a look at it. I think it's going to be a very exciting trading season, and hopefully we're all really celebrating Christmas and New Year's after having a great fall together. And I really think that if you invest in yourself by becoming part of our community and surround yourself with excellent traders, that your level will rise as well to theirs. So, you know, you kind of rise or fall depending upon the company you keep. So stay away from me. All right. Anyway, let's have a great day. Lydia's with us today, and we're near the countdown of Brexit. I thought it was a real interesting interview with Cal yesterday. I like what he said. I mean, he's a Brexit. He's a leave, and you know, he's a trader, and he said for him, the UK leaving would be a winning trade for him. Even though there could be some chaos in markets, just like there was on the vote, he would view that as possibly, you know, a generational opportunity. Talked about how much stronger the UK economy is than Germany and the rest of Europe. And, you know, maybe is a good thing. If Europe's in recession, maybe it was going to drag the UK into it, but maybe the Brexit is, you know, no one knows except Nostradamus what happens after Brexit. So with that being said, I'm going to turn it over to my colleague, Blake Morrow. Anyone ever hear of Blake? You guys know about him?
No, who is he? I don't know.
I don't know. Huh?
I fell asleep.
I met him in Somalia once.
Really?
Oh,
I got a bad joke for that one if you want one.
Oh, no.
Steve, how can you tell who's a wealthy, successful Somalian? He's a guy wearing the Rolex around his waist. But it was a bad one. But
oh man, that was a bad one.
That's
look at it. Look how bad Steve is.
That was really, really horrible.
Okay.
Oh, sorry, I found it funny.
Wow.
Steve has tried it before, but he would need some extra bands on that watch, right, Stel?
If I continue like this, soon I won't be able to put an actual belt around my waist. Not a watch.
I'm at the stage, guys. That stretchy stuff that you have on pants for, like old guys.
You wear elastic pants. That's awesome.
No, well, they have that give around on the waist,
Wow.
Did I distract you at all?
I'll take over from here.
Okay.
How's it going?
Good, buddy.
Okay, so I'll just take over. So the Bank of England met today, and they left rates unchanged. They left the door open for possible quantitative easing if Brexit doesn't get done. And I mean, we knew that, and we also knew that if inflation is going to rise if a deal gets done. I mean, if a deal gets done, we're going to get inflation in the UK because there's going to be a lot of pent up energy. There's going to be a lot of businesses coming back in, a lot of influx coming back in. It's going to it's going to spur the economy along, going to create some inflation. We already knew that, and obviously if we get a hard Brexit, the Bank of England wants to leave the door open for possible quantitative easing moving forward, and I think it's all a given. So the cable is still just kind of hanging tight. I was hoping that we would see a dip down below 124. I was looking to get long if we did, but we're stalling at the 161% extension to a T of this down move. So we still have a big double bottom or a range extension that points us even further higher. That's why I still have a bullish bias. I still would rather buy the pound rather than sell it. I just trying to find an opportunity to buy it is the key here. And we're just not seeing it at this moment. So the euro dollar, you're right. The FOMC did not provide much fireworks. We did, we got our hawkish cut, and the euro slumped to support to the 110.20, 110.30, and we've since reversed back up towards resistance. Now, I'll say this, that in the event that the euro gets above 110.90, 111.10, we will squeeze. I think the market would be caught a little off guard if that happened. More from positioning. So I still think that it's possible that we move above these highs. I just want to keep an eye on it because it is. I think it's still possible that we get some sort of move going into the end of the week. Remember, we had a really strong weekly candle on the euro this last week, so I still am and would not be surprised if we move higher here. So I'm kind of expecting a little bit of a squeeze, and how far will we go? I doubt it's going to be too. If we broke higher, I doubt it's going to be too high, but we could squeeze up towards 111.50, maybe even a little higher than that, going into the end of the week if it does happen. But the dollar does look a little vulnerable. I mean, you look at like the dollar yen. The dollar yen had a pretty key reversal yesterday. Last night we moved above the 108.35, this like little spike high resistance, and then we reversed, and now we're just kind of consolidating. We look like bear flag underneath the channel here. So the dollar yen looks, like I said, it looks vulnerable, and the euro dollar looks like it could squeeze. So I think you have to keep your mind open that we could continue to see some dollar weakness coming in and coming through the market here. One of the, you look around at some of the other pairs like the Aussie and the Kiwi, it's hard to imagine that we would see some dollar weakness. And if we did, is it really going to come through the Aussie or is it going to come through the Kiwi? We had New Zealand GDP. You can see here, New Zealand GDP came in a little bit better than expected, but it's still, it's trading pretty heavy. The Australian employment numbers, I think the headline number was better than expected, but unemployment rate went up, full-time employment went down. So the Aussie came under some pressure, and the Aussie looks weak, so it's hard to imagine that we're going to see some dollar weakness when you've got, the Aussie and the Kiwi are so weak. But then again, you look at the dollar Canadian and the dollar Mexican peso, those two are, they're selling off a little bit. That I think has more to do with risk appetite. So, and maybe the Aussie and the Kiwi do as well. So overall, it's a bit of a mixed bag. We did have Norway. They did actually raise rates last night, and they raised rates, but they're gonna stay on. They're going to stay on hold probably for the remainder of the year. I don't see them actually raising rates any further. But we got a spike below that wedge support, and then we came right back up to where we started. So I think in the only way that the US dollar Norwegian krona is going to start breaking lower from here is if the euro dollar, takes out the 111 level and really starts to surge higher. But, is that going to happen? I don't know. And, it's still, kind of up in the air. And frankly, if I sound like I'm really not sure what to do with the dollar at the moment, it's because I don't. I'm thinking, all right, well, we might get this squeeze in the euro dollar. Am I willing to step in front of it right now and start buying euros when we're not even challenging these resistance levels? We're not even making new highs over the last couple of days, at least not yet. I'm a little hesitant to do so. I mean, we've seen a lot of whippy price action. It has been very choppy the last week. So, of trying to avoid getting caught up in this mess is what I'm trying to do at the moment. But like I said, you look at like the dollar yen does look weaker, and what's going to complement like the dollar yen looking a little weaker, maybe the dollar just being weaker across the board, is that you have precious metals that still have a nice little bid. Gold's at its highs of the session, silver is near its highs of the session, and these precious metals look relatively strong. And if they continue higher, then that's just going to press the US dollar Japanese yen lower, is the way I'd see it. But I'd like to get my comments from some of my colleagues like Stelios and Steve, and see where they're at and what their thoughts on overall what the Fed did yesterday. So good morning, guys.
Good morning.
Hey.
Hello.
Good morning, Blake.
So we had quite a few interest rate decisions over the last 12 hours, right?
Yeah, we did.
So yeah, go on.
I was gonna say, and the BOJ was last night too. It's something else that I failed to mention, that the BOJ and the yen move really happened following the BOJ. I think it started a little bit ahead of time, but we continue to see some yen strength following the BOJ. So what was some of the interesting highlights that you saw overnight, Stelios?
First of all, let's start with the Fed, which I have to say, I thought they were going to be a bit more dovish. I really did think that because of the whole global situation, I didn't see any reason for them to be hawkish. And in fact, they weren't hawkish per se, but they just weren't as dovish as some people, including myself, thought. Now, what we have to remember is that, Jerome Powell is sticking with what he's been saying, and, kudos to him. And he's not letting himself get carried away with, Donald Trump and all sorts of other people calling for zero rates. We have to remember that last year, we've said this before, 2018, end of 2018, there was a pretty big 180-degree turn that they made. So they were quite hawkish, projecting hikes. Donald Trump was beating his drums about cuts. Jerome Powell said, no, we just steady as she goes. And then suddenly, within the space of a few weeks, he turned. I'm not a conspiracy theorist, but I think there might be a chance that this is happening again, that Trump is saying, yeah, we want much lower rates. He did to go on Twitter yesterday, blaming them for not cutting more, for not being more dovish. I think maybe
if you were running for re-election, would you pick a fight with the Fed? I mean, Greenspan knocked the first Bush out of office by staying tight too long. Do you really want to have an adversarial relationship with the Fed chairman going into re-election? I don't think so.
No, you don't. On the other hand, Trump is the one who put him there in that place, right? So theoretically, they should be working together. But anyway,
I've never heard that before. I've never heard that.
He selected him, right?
Huh?
He selected him, right?
Yeah, right. But every other president has selected Fed chairman, and I've never heard anything about that. They have to have they have to work together.
Well, you know what I mean. Not
because they don't openly say it.
Oh, is that but they always have?
Oh yeah, there's no question.
More or less.
Well, not in the case of George Bush, the first one that lost to Bill Clinton.
Since I know a little bit of U.S. politics history, I remind you that Bill Clinton was not the favorite to win until very late in the campaign.
Yeah, because the Fed stayed tight too long.
Yeah. So what I'm trying to say here, it's not that, I mean, it's not that Bush got no help. Initially, it looked like he needed no help, right?
Well,
So
he needed help. He said, "Read my lips." He needed help.
Anyway,
Anyway, I'm
question,
sorry.
no,
It's just so surreal to me, that now we're accepting that there's something wrong with a Fed that's not cooperating with the whims of our chief executive.
No, we're not accepting it. Theoretically, the Fed should be independent. In practice, what happens.
But people are going, working with them. That's all.
The question is, where does that leave us?
I'm an emotional Jew.
All right, buddy. The question is for me is, where does that leave us now? And the market's pricing 2.5 more cuts for the next 18 months or so. Which I think is probably fair. Although, to be honest, they're either going to cut down to 0 or they're going to stop pretty soon, depending on how.
I agree 100%, Stelio. There is no middle path, in my opinion. Exactly what you said. Yeah. There's no middle path.
So that's what we're left. And the interesting thing is that the dollar actually strengthened initially, as it wasn't as hawkish as people probably expected, as dovish, sorry, as people expected. And then it's come back a bit. So I'm just letting it, letting it go now and see what happens. And I actually closed I had 2 patterns in play on dollar Norway short and euro sterling short. I closed both of them yesterday because it just, I just wanted to wait and see what's going to happen with the Fed, with Bank of England. We're getting very close to the October deadline now. And one thing I want to say about the Bank of England is that, we had the 9-0 vote to keep rates unchanged. The Bank of England, for the first time, from what I understand, actually warned explicitly about a delay in Brexit and how it's going to bring inflation down and growth down, and how it's obviously not a good thing. That's I think that's a given, and that's why they pay Carney the big bucks to tell us these things. But the other thing I want to say is that if there is a Brexit deal, what you said earlier, Blake, I think short term, the currency's appreciation is going to keep inflation low. In the medium term, obviously after things start get rolling, yes, inflation is probably going to go high. But I think in the short term, the currency's appreciation is going to be a very strong force. But anyway, bottom line is we have to wait more for the UK. There's nothing we can do right now, and that's why I actually closed the pattern play. It went really well, so I said I'm going to wait and see what happens in the next couple of weeks. And that
was a really great euro pound, by the way.
It was awesome. A good run.
I was very lucky. I said this in the chat room. I was very lucky when I put it on, both the pattern play and also my personal position. It just turned and never looked back, which is amazing when that happens. So that was very lucky, I thought. The other things we had, Bank of Japan and SNB, also no change and nothing really. I mean, the Swiss franc actually did appreciate a little bit, but really nothing to write home about. And the other thing you mentioned was Norges Bank. They hiked rates. It was a 50-50 roughly before they did it, but they brought down their projections, and essentially they're saying now we're going to be flat.
It's still, I've interviewed over 1,000 traders in the last several years. You're one of the best macro traders I've ever seen.
Thank you.
One of the best. You really are.
I get lucky as well. So
I'm not against luck, but we know you're just being humble. Your ideas are excellent.
Well, thank you very much.
Don't ever sell yourself short.
They really are. So, Steve, what are some of your thoughts on what happened over the last 24 hours?
And you're a much better trader than Steve Volge.
Absolutely.
That's a given. Yeah.
Don't you think?
That's a given.
All right.
That's a given.
Go ahead.
There's no question. The market expected a more dovish Powell, and that's why I thought when we saw the statement and when he started speaking, I thought that there is a lot more downside coming from stocks. I mean, stocks were hovering at around 3,000 for quite a few minutes, and we did start getting some acceleration lower. Probably he realized that, or somebody told him. And then what turned around stocks is that he hinted of upcoming QE in essence. And that was what the market needed to become more optimistic about what they got yesterday. Because absent of that, I believe that stocks would be a lot lower today and the dollar would be a lot higher today. But that last hint about how easy it will be for them and how ready they are to, in essence, unleash QE, I think what nullified the effect of a more hawkish Fed than the market expected. So in essence, after all that, it ended up being a non-event.
Yeah, and and we can see it obviously in the price action with whether you're talking about the euro or the yen or it's all very very quiet in currencies. Now we do have yields that are selling off. We have the front end that's selling off. Bonds are rallying right now on the 5-year and the 10-year, not so much the 30-year, but we're seeing yields move down, and I think that the dollar yen is taking note of that, because even though stocks are higher, we've got yields moving lower. So if you can take a look at the 10-year yield, you can see how yields are starting to move lower here, and the dollar yen is basically following suit at the moment. So it's quiet. We should be waiting for some breakouts here. I think that we're also seeing some strength in crude oil. By the way, I just want to mention that crude rallied off the 618 retracement, and it's firmed up here. We're at the highs of the session. We're breaking some intraday resistance. We might head back above 60 and towards 61, I think. So crude may continue to rally, which would keep a bid in the Canadian dollar, maybe in the Norwegian krona as well. So just a few things that are that I'm seeing, and like I said, it's pretty quiet, but we do have we have current account, we have Philly Fed, jobless claims. So is this going to move the needle going into today? I kind of doubt it, but I think what we have to be looking at today is the euro dollar, as we approach this 111. Let's see if it can actually try to break out, or move back below 110.30 is probably going to put some downside pressure on the euro. So I think we just need to stand aside and let the market tell us which way it's going to go, versus us trying to figuring out where the breakout's going to be. Although I do think I think the euro's risk is higher. I think you got to be patient with it. So with that being said, I want to say if you guys have not taken advantage of the seasonal offer, make sure you do so. Remember, it's buy 1 month, get 1 month free, get 25% off 6-month plan and a 35% off the annual plan. That's like the best prices that one of the best prices you're going to be able to get all year long, and we only do this offer a couple of times a year. So make sure you take advantage of it, and make sure you download the app as soon as you launch ForexAnalytix, so this way you have all the notifications and everything pushed to your mobile device. So I'm going to pass it over to my colleagues Steve and Stelios. Guys, thank you so much. Good luck today, and I will be back tomorrow morning on to wrap up the week.
Thank you very much, Blake. Have a nice trading day.
Thanks, guys. You too.
Thanks. Actually, one more thing to note while we have 1 minute left. We had some more data out of the UK today. Pretty important one: retail sales. The month-on-month number, which is the important one, came in line, but the revision was a bit higher. So overall, it's this series is quite volatile, but it's overall it's been okay. I want to say okay, but given the circumstances, it's been quite good. So yeah, that's it. So now let's have a look. What are we going to look at? Dollar yen or what?
Use Philly Fed manufacturing, initial jobless claims, use current account. Yeah, we can switch here to USD yen and keep the everything else on as well and see what we get. I doubt it that we're going to get something that's really going to move the market, but you never know. If we get some kind of a big outlier,
yeah,
it might. Let's see. Any second now.
It's funny how yesterday the numbers came in exactly the same time as Bloomberg.
Yeah, no, it's
It's really great.
Data flash is equally flash. It's amazing. It's an amazing tool, actually.
Yeah, it's amazing.
What's up with the data? Why are they? There they
Okay.
go.
Okay, jobless claims
Yeah,
slightly better, but Philly Fed,
nothing. Philly Fed
is it?
not out yet. There
12.
it is, 12
Okay.
versus 11.
Okay, it's not going to move the needle, that's for sure.
Nah. Everything was plus or minus, a minuscule difference as expected. So
interesting to look at the sub categories. Philly Fed prices paid 33 versus 12.8 the last week.
Really?
That's quite a big jump. Yeah, I want to have a look at that series, see how volatile it is. I'm guessing it's very volatile. But,
yeah, it might be. And as you remember, Stelio, the vast majority of those data get revised afterwards.
Yeah.
So, you might get an initial number which is totally different than, what the final number is.
Yeah. Okay.
Okay, Stelio, did we have anything else overnight worth mentioning?
No, I think those 5 interest rate decisions were enough. No, that's about it.
No, Stelio, as it seems, they weren't enough because, at the end of the day, what we want to see is some volatility. I don't care if it's 1 or 25 of them, as long as something moves.
Yeah. Okay, man.
Okay.
Thank you, Stel, and again, great Euro pound trade.
Thank you, guys. Thank you.
Okay, perfect. So, Coach, any requests? Where do you want to begin today? And I'm also going to open the question box so we can see.
Okay, why don't we start? The metals are popping with the U.S. dollar yen down, maybe the gold silver ratio. And Steve, I think we're going to switch from economic data to how the market responds to a retaliatory strike against Iran. I think the U.S. has to do it because, if Saudi does it by itself, and they have the right to do it on their own, that could actually drag it'll drag us in anyway, but we could control it. So
as you know very well, we had this conversation yesterday. I have a lot of American friends. I have an American partner. I went to an American Greek school and to an American Greek university. So there's no question about my love for the US. If you want my honest opinion, the US should stay away from military conflicts, full stop.
Oh, well, of course, but I know, okay, that they should. But,
yeah, I'm
just talking about what could happen. Not that I'm in favor of anything or against anything, just the fact that we did nothing when they shot down the drone. People are talking that we should have, like Lindsey Graham, that it was a sign of weakness. And to control this, it would be worse if Saudi went there on its own, because that would spread the whole thing. Okay, if we did it, it would be a little different. But I think it's going to happen. So I'm just wondering if you think, we had that big spike in crude and it's given up a lot of it.
It's given up a lot of it, but something, Coach, if you remember when we were trading up here, it was like 3 days ago in the webinar, I said the exact thing that I'm going to say now. This is a breakout. There's no question about it. Okay. But why would you be buying it on resistance? I said back then, 3 days ago.
How about now? Okay, yeah.
Yeah, and I said back then that, listen, I understand if we retrace back to, to test 58. That high at 60, 70, and if you get lucky enough, those were my exact words, if I'm not mistaken, and you get a move back down to this horizontal support area at 57, 80, then it would be an interesting proposition.
That was the low yesterday.
Yeah, and that's exactly where we
followed your instructions.
Yeah, that's exactly where we stole yesterday. So if you're asking me, I don't care about the fact that theoretically speaking, the initial squeeze, the reason that we got the initial squeeze is not there anymore, because the Saudis say that supply is back to 100%. I know that we still have a technical break here. We came down, we retested the previous support resistance area and it held. Right. So I do think that against this low, it doesn't look like a bad proposition being long.
Okay.
So I'm with you there. I'm with you
Okay.
there.
I was wondering.
It looks, yeah, it looks interesting to the upside. I mean,
No.
the risk reward is definitely there. There's no question about it.
Okay, bro.
Yeah. So beginning by that,
Thank you.
I agree 100%. Now, having to do with the metals, what do you see here in gold?
Possible head and shoulders.
Besides that, I mean, what kind of price action is the one we're seeing during the past few days?
I'd call it corrective, just stabilizing after the big break from
Exactly.
last.
I mean, I still think I'm still holding my short. I held it yesterday through the event. I still think that there is a very, very decent chance that there is more downside coming here for gold. And if we go to silver, you're going to see that it's not very dissimilar. In essence, here we also got something different. We retested these broken channels, support as resistance, and we seem to be consolidating. So I would expect there's more downside coming here as well. Now, having to do with the gold-silver ratio that you asked for, it still remains below this descending trend line. So I still think that, you know, we might see more upside here if we break above this trend line, but as long as we're not doing that, it is very likely that we're going to see more weakness. Now, if we break above that trend line, that's a totally different story. So gold-silver ratio is on the precipice here of, you know, a technical event. But irrespective of what happens in the gold-silver ratio, and I know that, you know, usually when it overperforms, when it's moving lower, metals are doing better, and, you know, the opposite. Regardless, that's, you know, that's the general rule. It doesn't mean that for a few days you can have a weakening gold-silver ratio and metals doing good, or the opposite. Okay. Anyhow, gold and silver still look to me quite appealing for a continuation lower for one more leg to the downside. And then I will be actively, unless the price action starts becoming like very, very bearish, I will start actively to look for opportunities to be long.
Thank you, buddy.
My pleasure. Now, let's have a look at palladium, because I said this a few days ago, and then I'm going to go to FX. I've seen your questions, guys and girls. A few days ago, I said this, and nothing has changed since then. So, you know, there's still a time that palladium, this looks like a cup and handle formation, and the price action lower that we've seen so far. I mean, we've spent 5 days very, very, very slowly drifting lower in a manner that definitely doesn't look impulsive. So I still think that since we ended up breaking above this trend line and price action seems corrective, palladium still looks good for more upside. Initially, I was looking, when we were at the beginning of that rebound, I was looking for lower prices. I thought we we're going to get, you know, more choppy price action within like a large triangle, but it looks like palladium might be done. And a cup and handle formation is a textbook continuation formation. So if palladium gets bid here and we see it go above 1620, I'm pretty convinced that palladium is going to go a lot higher. I mean, 1800, 1830, cup and handle target even higher than that at 1930 or whatever. So that's the story with palladium. Now, having to do, before I forget, let's have a look at the bonds, because I wanted to mention them the day before yesterday. I forgot, then I wanted to mention them yesterday. I forgot once again. So before I forget for a third consecutive day, let's have a look at, let's have a look at what's happening here with the two benchmark bonds, meaning the German Bund and the 10-year Treasury. Okay, so I was short the German Bund when it actually was breaking down from this double top. Unfortunately, I even made a pip about that, a pattern in play, which we unfortunately had to completely delete the next day because it was the rollover of the Bunds. So the price would be such that it would fulfill my target immediately without, in essence, the Bund moving, just because we had the rollover of the contract. So, of course, I kept my position, but we deleted the Bund because we don't want to show a profit that's not real. You know, we want to be very honest with bookkeeping. So Regardless, I'm still short the bond. And as you see, we've had a nice, healthy move lower. And in my opinion, it's not over yet. So I do think there is likely more downside. I remind you that the bonds have produced a massive, massive rally after breaking out from this multi-year consolidation. But, you know, that path higher was in essence unsustainable, okay? So I would be expecting the bonds to spend more time correcting. And I do think that this rebound we've seen during the past few days is probably a short-term bounce before seeing more weakness. Probably that's the case with the treasuries as well. This is what we drew with the treasuries. I didn't take that trade because I preferred to take the bond trade. So, you know, between the two of them, I chose to go with the bond. Now, once we broke down within this ascending channel, because we had overthrown that for a period of time, I expect that we're going to see more downside, perhaps to retest this channel's trendline support. So far, we are seeing a bounce, but to be honest, this bounce looks to me like a bear flag, which means that I think that we're not done moving lower with the treasuries either. So in both cases, I would expect, at least in the short term, more weakness before seeing the larger trends, come in place. So that's what I think. Now, let me go over your questions. Question about the euro. Yeah, absolutely. We can cover the euro. It's very easy anyhow. Pound Kiwi. Pound Kiwi is, we saw it yesterday, but it's at a very interesting juncture. So we're going to have a look at it. Euro Kiwi. Yep, we can do that as well. Gold. We already saw gold. Okay, so let's go over those one by one. So let's start by the Euro USD. The situation with Euro USD is quite simple. First of all, I see no reason to trade it as we speak. Okay, and I've been saying that for a year, more or less. Actually, more than a year. Now, there are three trend lines, though, that are very important to notice because they're actionable. Okay, the two most important, the two more important, between the three of them are this red trend line here and this one, because we have this descending wedge, and one is the trend line resistance and the other one is the trend line support. Obviously, a breakout or a breakdown from these will be a major development. Now, if you really want to trade it within that range, there is also this descending trend line that I'm highlighting here, the intermittent one, which if we break above it, and especially if we break above this previous high, which was also 38.2% fib at 111.10, it opens up some room to make it all the way up to that trend line resistance we were talking about before. So basically, I wouldn't be doing anything with the Euro USD between 109 and 111, but above 111, I think we can easily find ourselves trading at 112.50, and above like 112.50, 113, I think it's a game changer, because I do believe that people are going to start getting seriously squeezed. There are a lot of short positions in the market. There is a lot of bearish sentiment in the market having to do with the path of the euro against the USD. So I do believe that a break above 112.50, 113 can produce a sharp move higher, much sharper than the vast majority of the market participants expect. But until any of that manifests, I think the best thing you can do is monitor. Now, the reason why I immediately agreed to have a look at the Euro Kiwi and Pound Kiwi again is the fact that both of them are on interesting resistances as we speak. One of them, the Euro Kiwi, you can see it's currently testing once again this descending trend line resistance. So things are quite simple. We get rejected from there. We open the door for another move lower towards 168. On the other hand, we break higher from here, especially the 176 area. In essence, we go above 176, and I see no real resistance until we retest that high at 179.30. So it's another like 330 pips of upside in that case. Okay, so Euro Kiwi, interesting to notice because of that fact. Also, notice here at the same time RSI is testing trendline resistance. Okay, now Pound Kiwi. Let me open it. Pound Kiwi, we were monitoring this ascending channel, and Pound Kiwi is testing the channel resistance. So as I was saying yesterday, because that hasn't really changed since yesterday, you know, there's no risk reward to be buying the Pound Kiwi here. There's no question about it. So it might move higher. It can definitely do it, but buying it here doesn't give you a risk reward to do that. So if you're buying it here, you're taking a bad trade, even if it ends up working. I mean, you're taking the kind of a trade that if you keep taking those kind of trades, you're going to find yourself losing more money than making money. Now, if you want to buy it, what you're looking for is a retracement back towards 194. A move back towards 194 is going to give you a decent risk reward to buy it. Alternatively, a breakdown from like this ascending channel support and let's say 193.50 is going to be a bearish event. And in that case, I would be looking for a move towards the long-term channel support, which currently passes from 186, 187 almost. Okay, so I wouldn't be buying it here. I would consider buying it at 194, if I wanted to be long the Pound Kiwi, and below 193.50, I think it's a short. As simple as that. So, that breaks down my point of view. Pound Aussie, yeah, sure. Since we're here, we can just switch to Pound Aussie and see what's happening. Pound Aussie, more or less the same situation as you see, appreciating within an ascending channel. Keep in mind, though, I wrote that in the weekend analysis as well. I mean, the broader formation is an expanding triangle. So, we are trapped in an expanding range, right? So, I mean, there is no long-term trade to be taken here. Now, if you're looking for shorter-term opportunities, I have to say that we're testing the 61.8% fib at the moment, so you should definitely notice the importance of this level. We also have a few pips higher. We have this horizontal support resistance area. So in general, this 184, 184.50 might prove quite a tough area to crack to the upside. So no risk reward to be long here. There is some risk reward if you want to be short here, on the other hand, for at least, a move back towards this red ascending channel support. But in general, as you see, it's quite clear from this chart, there is no direction. There is no trend. There has been no trend in the Pound Aussie since the end of 2017. That means that no matter what you want to do here, you need to take that into account, having to do with your time horizon. Okay, so the type of trade you want to take. Bottom line, don't take any long-term trades here because you're in the middle of an expanding range in a pair that has been trendless for more than 1.5 years. Okay. Now we have a question about the CAD Swiss. I remember years and years ago. Now, how the hell I remember that? I was on an island. I was there for a wedding. Must have been summer of, I don't know, 13, 14. I had made some good money trading the CAD Swiss, but I think it was short or whatever. But that probably was the first and only time I have traded this pair. Because in general, you can see the type of price action it has, right? So I really don't know what to say here. I mean, first of all, let's redraw support. Okay, we have this support trend line there. We have this resistance trend line here, and we have an interim support resistance area. Some more as well up there and down here. So bottom line, huge triangle. Just look at it. We are in a triangle since 2015. January 2015, trapped in a triangle since January 2015. It's soon going to be 5 years. I don't know what I can tell you here. I don't know, actually, I know what I can tell you here. Don't trade it. Really, don't trade it. I mean, now if we go down to short-term charts, yeah, this might be a little bit of a bull flag and we might see a little bit of a push higher. But, all in all, so what? Might be some kind of information like this.
Steve, Lydia had something come up. She can't make it today.
Say again, coach?
Lydia can't make it today. Something came up for her.
Oh, sorry to hear that.
She said the tweet confused her. That face started in 10 minutes, but we've always used the same tweet.
We've
Face
never changed that tweet.
Yeah.
Yeah.
Okay, anyway. So
we've been using that tweet for 3 years.
Yeah,
whatever it is,
2.5
years and whatever. Yeah, 2.5 years, whatever it is.
Okay. So if you want to go OT, you can.
I don't think it's really needed. So anyhow, cut Swiss. It is what it is. Watch for resistance, roughly at 76 cents. Okay, but as I said, don't trade it if you want my point of view.
You're a very happy guy today.
Yeah.
You find yourself funny and me funny. Wait, I do too, man. Has your wife ever said that you're your best audience because you think you're funny?
What she's told me is that I'm a really bad influence because my humor is affecting her, and that doesn't do her any favors socially.
That's pretty good.
Because she's a lawyer. So.
Oh yeah. Okay, buddy. Funny.
So USD same situation. We're trapped within this ascending wedge. I mean, I know it's very disappointing, guys and girls. I mean, very disappointing the fact that we've had so much event risk and
nothing's happened.
Yeah, I mean, isn't it?
Yeah.
You would expect so many.
Yeah. Yesterday my comment was, even during the press conference and everything, was, wow, how muted.
Yeah, and it's pretty disappointing. Now we have a question about Euroswiss, and I know that we have at least one friend in the chat room that likes to look at Euroswiss. I can tell you two things about Euroswiss. One, it's making a legitimate effort in breaking higher. Two, it's something that moves slowly. So that is an advice you will never hear from me. But in the case of the Euroswiss, I'm going to make an exception and say that if you want to trade it, use more leverage, because Euroswiss is going to move at a fraction of what the average FX pair does, with the exception of when they decide to impose a floor or take away the floor. Other than that, it's moving like with snail's speed.
The Euro Swiss is a ARP approved Forex pair.
Yeah,
you know what ARP is, right?
You said ARP?
ARP, American Association of Retired Persons. It's a very big lobby.
No. ARP. I didn't know that.
Yeah. Okay. Well.
I did remember though an extremely funny story that Peter Schiff has said once about how funny political correctness can be sometimes. Now, why did that trigger that? Because it has to do with the word midget. I do remember a story that he had said, which is quite funny, having to do with political correctness, that once he did a podcast and he was talking about a stock that was a single digit midget. I don't know if you've heard that expression.
No, I haven't. Yeah.
Yeah, whatever. So he received, like a few days later, a letter from the Small People Association telling him that the word midget is inappropriate when he was actually referring to a stock.
Yeah. Yeah. I know. Yeah.
Yeah.
I know.
This story came to mind.
Everyone's angry nowadays, Steve.
Yeah, a lot of anger. Yeah, actually.
Isn't
yeah.
there?
Yeah, there is.
And you know what? It's starting to piss me off that everyone's so angry.
Yeah, it is actually, because this way people fail to communicate about basic stuff. So much anger about some stuff that are really less important.
Let's sing Kumbaya. Everybody now. Kumbaya. Okay, just kidding.
So Euro Swiss, yep, that's the situation with the Euro Swiss. Let's have a look at the Euro Yen, though, since we're talking about Euro pairs here.
Yeah.
Euro Yen. We were actually here when we spoke of it last time, and I said that, listen, it looks like it might pull a little bit back and then it might head higher. It actually did both those actions within the same day. So within the same day, we saw that pullback, and it actually ended up closing higher. So that was quite a nice continuation candle, and the price action that has produced since looks more to me like some kind of a pennant than anything else. Bottom line, it looks like there is more upside here for the Euro Yen. So I wouldn't find it unlikely to see Euro Yen trading more towards 123 within the next few days, weeks. Keep in mind that 122.70 is a horizontal support resistance area, and as you see, that blue line converging there, actually about to enter that area, is the 200 daily moving average. So within a few days, at the middle of this little area, we're also going to have the 200 daily moving average. Obviously, the next area of resistance, as you see here, is the 61.8 at 120.50, also previous low. But if we make it there, which I think we will, and we break above there, I think that the next target is 122.70. So that's... Borgin says, please spend time in teaching more than communication, less of data. Sorry, the message is a little bit incomprehensive.
He wants us to teach him how to trade at our free face webinar, which we do plenty of mentoring.
Yeah, but and if you have, and regardless, if you have a specific question, like yesterday I was explaining, for example, how a MACD indicator works, and why you should or why you shouldn't use it. So asking me to teach you without giving me a topic is like
might take a while.
Yeah, it might take a few months. So yeah, if you have something specific you have a question about, I'll be pleased to answer it. Okay.
You did read that Ziggy confirmed my story about Bush, and Greenspan?
No, I didn't.
All right. Well, he said he said that there's an article he sent me from the Wall Street Journal. So before the election, Clinton said that he would keep him, and Bush wasn't sure. So it was politicized.
Yeah, needless to say, that was a mistake, obviously. Right.
Yeah. So that's why Bush blames the Fed for that.
But by the way, speaking of Greenspan, let's not forget that Greenspan created the playbook, which we've seen play since.
Yeah, the maestro.
Regardless, it's interesting to see that Greenspan during the last, it's definitely more than a year, has distanced himself from this monetary policy.
Yeah,
yes.
From himself. Yeah.
Yes. In essence, it's like he's saying, listen, guys, I gave you a playbook which I never thought you're going to expand upon and make the basis of how we conduct monetary policy
forever.
Forever. Exactly.
Yeah.
So Greenspan, in essence, is
Refuting
on the other
it.
side of
Yeah.
absolutely. In essence, he wants to distance himself and his legacy from what is happening now with monetary policy. And it's very interesting to notice that, because the person that created the beginning of the type of monetary policy we see now,
Yeah, he built Frankenstein.
yeah, in essence, considers it a mistake at the moment.
Yeah.
And that tells you all you need to know about the prospects of MMT, the modern monetary theory.
Ever hear of Ayn Rand? And Randian, she was an author. I forgot some of the books she wrote, but he was in that inner circle, very influenced by her, Greenspan. Ayn Rand, check it out. So a lot of his belief system was formed there. Can anyone help me with a book that Ayn Rand wrote? There you go, Cheryl knew it, Fountainhead. Okay, and it's about kind of a Atlas Shrugged from Ben. It's kind of a libertarian type of, how would you guys define that philosophy? Libertarian? I'm not sure.
Libertarian
Okay.
pursuits.
Yeah.
Ben.
Yeah.
Okay.
Objectivism. Okay. Objectivism. That was her thing. So I don't know if you've ever seen the movie, but they were made into movies. You ought to check it out, because it did influence a lot of American thinking in the 60s. And he was, not Fed chairman then. He was still trying to be a violinist. So anyway,
I will
just a little
definitely
something
check
for
it
you.
out, because anyhow, I'm libertarian, as you know, having to do with the economy. So yeah, absolutely. I mean,
Yeah. Okay.
I will actually research into that, and
That's how he became who he was.
choose a book to read whenever I find some time.
Just like you were so heavily influenced by Stelios that you became the man that you are today. Anyway, is that a wrap?
Yeah.
All right.
Don't just count your pips, count your blessings, etc.
I count you as one, Steve.
I count you as one.
I have a great time hanging out with you every day. So, people say, how do you like, working at ForexAnalytix? I go, man, it's fun. So, thanks for having fun with us, everyone, on investing.com and here in Face and YouTube and everywhere else that we're streaming Good Hunting. And we'll see y'all to wrap up the week. Steve, have a great day the rest of the day.
You too, Coach.
See you later. And guys, don't forget, 1 week, a little more than a week left on the promo. See, you're very welcome, everybody. Adios.